What's going on, guys? It's Luke here. Today I want to do a different video for YouTube. I wanted to go over a market breakdown on the day of January 2nd, 2026. First trading day going into the new year. Again, most of you guys are probably starting trading on Monday, but I noticed there was a lot of good setups for today, and I wanted to kind of go through it. I think it's a good idea to help to go back at the end of the day and back test through the setup, see what you missed, see what you could have done. And it's always a learning experience. I drop these every single trading day in the Discord for free. So if you guys want to join, the Discord link is in the pinned comment. If you guys need a discount link to Alpha Futures, you can use code LukeX. It's 25% off until tonight, and then otherwise it'll be 10% or whatever the best discount is. So I'll have all those links in the pinned comment. But we're going to run through the market, kind of what setups you guys could have taken today, just some areas to look at, and what you could learn going from the day. I kind of just run through every possible setup for mainly the AM. I don't really look at the PM, but basically coming into the day, we were trending bullish. Where's the candle going into market open? Yeah, right here. We were trending bullish, and on the 1 hour, we were respecting out of a 1 hour bullish fair value gap right here. So for buy side draws and liquidity, we'd already taken out London high, but we had this PM high right here. We had this AM high, which was also the start of a daily bearish fair value gap. As you can see right here, we had that. So those were our buy side draws and liquidity. And for sell side, we had London low, we had this 4 hour gap, we had these two stacked up 1 hour gaps, and then we had Asia resting all the way below. So looking back at the market, I could have assumed we would probably want to make the move up and continue up. And then if we got to move higher off that gap, we could want to come down, which is what ended up happening. That's what I would assume going into the day. So because we were trending bullish, that's what I would have, that would have been my main idea. But, I just kind of work with the price action and what it's showing me at the time. So if we go back in time, I'll give you guys some of the setups that you guys could have taken looking back at the market. So market opens up right here, and we get a clear manipulation to the upside. So this actually looks like a clear opportunity to short. We get nice displacement to the downside. You get a retrace right here. You get a rejection. This would be a pretty good opportunity to short. But if you actually go back in time right here, let's just say you took this short. If you look at ES had already taken out London low. So you have to assume that it's a potential bullish SMT situation. So you don't really want to jump into that unless you're going break even right away at that internal low, and then you would have been stopped out break even. So if ES hadn't taken out that London low and both had London low as a draw on liquidity, this would be a very good setup. Again, we manipulate up off market open, displace down, continuation off this 1 minute gap, inversion, strong bearish close. This would literally be a good, like a perfect entry or entry right off that displacement candle, and then you're targeting London low. But again, once you see that ES has already taken out London low, you got to be cautious at that point. ES at this point was reacting off of a higher time frame gap. So at this point, you kind of want to just avoid that and let price play out from there. So that would have been a good short setup if ES hadn't taken out the draw, because that just, decreases the probability. Of course, ES could have continued lower, but majority of the time, that doesn't really, you just got to play it safe. So from there, we actually end up getting a bullish SMT off the low. Again, ES sweeps out London low, NQ doesn't. So we have a bullish SMT. Now, what do we get here? We get this 1 minute inversion. We get a nice push to the upside, nice displacing candle, whatever. Boom. You could have taken this right here. You say, okay, bullish SMT off the lows. ES swept London low, NQ didn't. This candle right here at 943 gives us a nice inversion. Do we have anything on the 3 minute or the 2 minute? Nothing. So this 1 minute would be pretty much the candle you're entering off. You enter right there. You could even enter on the retrace back into the inversion, but let's just say you enter on the break. You could say you could go break even at this internal high right here or this one, and then you could literally take profit here for just a little over 1-to-1, or you could have held to that AM high, which was the start of that daily fair value gap. So let me put the indicator on, and as you can see, this was the AM high from Tuesday, but it was also the start of that daily FVG. So totally up to you where you wanted to take profit. You also could have taken profit at these highs over here, but anyway, any of that you would have made profit on that. So the basis behind this trade, again, we have a bullish SMT off the lows. ES sweeps out London low. NQ does it. We have a bullish SMT. We get this inversion right here. Nice displacing candle right here. You could enter there. You could enter off the retrace, whatever. You could go break even right here. You could go break even right here. You could take profit here, whatever. But at the end of the day, you have to see that order flow is shifting from bearish to bullish. We're getting clear confirmation that we probably don't want to continue lower and we want to continue higher for the time being. So this could have been a great long opportunity that you guys could have taken there. From there, we come up and price taps into that daily fair value gap right here. And one thing to notice is we have this 5-minute unfilled gap right here. So we could assume if price comes into this gap, there's a high probability it could come up. But again, we're reacting off a daily FVG. We have a draw lower. We have this unfilled gap. And then below that, we have London low. We still have Asia low all the way down there. And ES still has Asia low. So we technically do have draws lower. And we're reacting off a higher time frame daily fair value gap. So at this point, I would be looking most likely for some type of short. So we look over here, and this most likely would have been the entry that I would be looking at. Again, we tap into the 5-minute right here. We get this move up, but we continue to hold this 1-minute bearish fair value gap. Then we get this 1-minute inversion right here. I believe that was the highest time frame. Let me just see really quick. So let me just double check. I guess we had a small 2-minute, but it closed at the same time. So basically, again, price comes up, it taps off of this daily fair value gap. Okay, we're looking at this 5-minute right here. Price barely wicked into it, but for me, when I see price barely tap into this gap, I'm assuming it's probably going to want to at least come down to the CE point of this gap, right? We have draws lower. We're reacting off a daily bearish fair value gap. And here's the part where that probability really gets higher. So as you can see right here, NQ makes a lower high. And if you look at ES makes a higher high. So we have a bearish SMT. So personally for me, I would be looking to enter right here. 1-minute inversion. You could run your stop here. You could run your stop up here. Let's just put it right there. And then you could go break even when we tap this 5-minute CE right here. And then you could have literally targeted all the way down to this swing low to be safe. You could have targeted London, or you could have left even runners all the way down to Asia. I don't think anybody really expected price to dump that much, but you could have just went like right here, let's just say. And then let's just play it forward. So there, I wouldn't have gone break even right there. I would have waited for CE to get tapped, which is a little bit riskier, but we get that flush down. Personally, again, if you did go break even at this internal low, it is a little bit of a riskier one, but again, I'd be waiting for CE. And at this point, I believe ES was ripping. ES still hadn't tapped that 5-minute gap at the time yet. So you could have assumed that ES and NQ are probably both going to want to push a bit lower. SMT draws are lower. It just makes sense. Go break even right here, hold it, and then bam, TPs would have been hit wherever you put the TPs. If it was in these gaps, London low, Asia low. Personally for me, I probably just would have gone there or like London low. But again, I'll run through this last one more time. Price comes up. It reacts off of this daily bearish fair value gap right here. Okay, we go over to the 4-hour. As you can see, or not the 4-hour, sorry. 1 second. Let me go back here. Price makes an internal SMT. We have this 5-minute unfilled gap as you draw on liquidity. Again, price just barely ticks into it right here. Comes up. I'm assuming price is going to want to come down to the CE point at least. And I'm just assuming we're going to go lower because we're reacting off a daily bearish gap. And the draws are lower. So it would make more sense for me personally. That's what I would do. Again, when you do this in live time, it's a little bit different, but you get an SMT off these highs. You could take this 1-minute inversion right here. You can go break even here, and then you could hold it lower. Again, if this gap wasn't tapped into, it would make it a little bit better. But again, that's a setup you guys could have taken, or you could have just taken it like you could have seen that the 5-minute closed. It didn't technically inverse it right here, but you probably, was there a continuation on the way down? Let me see. I don't think there was really anything for continuations, but yeah, it kind of just flushed down. So you would have had to just seen we reacted off a daily gap. We had an SMT. We had an inversion. Manage it break even at the 5-minute CE, that gap, which again, it is a little bit sketchier, but is what it is. If you guys did catch this, that would have been an amazing trade. And then I feel like this long right here was a great trade. Bullish SMT off of London low, nice inversion right here. You run stop at this low right here, and you could have targeted up to that gap or these internal highs, whatever. So to me, these look like the best trades you guys could have taken. Again, probably would have targeted these highs over here, but again, you could have caught this long right here, bullish SMT inversion targeting higher, or you could have seen this one reaction off the daily fair value gap, SMT inversion, manage it break even in this gap, or once we get the flush down and then held that lower. So that's it from you guys. If you guys want me to make more of these breakdowns for YouTube, comment below. Otherwise, they're all in the Discord literally every single day, so go check those out. Links on the pinned comment, and I'll talk to you guys in the next one. Peace.